Hello and welcome to January's first, actually 2025's first AgeTech webinar. This month, we're discussing the AgeTech market outlook. I'm Karen Etkin, creator of the gerontechnologies.com and the AgeTech Academy. So starting with today's agenda. First of all, we are covering the critical challenges in AgeTech and their economic implications. Then we'll sort of orient ourselves around the three pillars that I like to orient myself around, which are demography, economy, and technology, which I feel gives us a solid understanding of where we are today in our efforts to make maximum impact in this ecosystem. And then we can dive into the major milestones from the past year or so and take out our crystal ball and look into the future. Ready or not, let's get started. Starting with some critical challenges in aging and their economic implications. If you've been here before, you are familiar with the challenges of aging. And one major report that was published in the past year quantified the major challenge of dementia for us. And this, even though only a relatively small percentage of the population will ever be diagnosed with dementia, those numbers are obviously growing year over year. And the economic implications for this are quite remarkable. So we have currently around $1 trillion of the cost of dementia, according to the World Alzheimer Report. So those are global numbers. And that number is expected to more than double. And so this means that the challenge for startups and the opportunity for startups is going to grow and grow and grow. And so we still don't see many startups serving this population, not enough in my opinion. So that is a huge opportunity. One other organization that really does phenomenal work in quantifying the challenges of aging for us is the World Economic Forum. I like to look at their reports because they are really great at not just quantifying it in terms of how many people, but in terms of how many dollars and cents these challenges are worth. And I'll put the link to all of these reports in the slides, and we will share the slides along with our presentation, so you don't have to worry about it. Starting with workforce participation. So according to the World Economic Forum, the potential growth for GDP in high-income countries is $5 trillion if they had only people employed for longer. So there are plenty of older adults who are looking for work and are willing and able to work, but they are unfortunately unemployed. And that puts a dent in economies that impacts the growth of the largest economies in the world. Now, when they surveyed older adults and they asked them globally, they did a global survey of older adults and they asked people if they're willing to work, if they are still looking for a job. 25% indicated that they would like to work, but are not currently doing so because of a lack of attractive opportunities. And we also know that people worldwide are outliving their retirement savings, that people don't actually know how long they have to live post-retirement. Another piece of interesting bit of information comes from the Harvard Business Review. They tell us that the 65 plus population is the fastest growing segment of the workforce. We see that echoed in other reports as well. So there is a huge opportunity here, and governments are also by now able to quantify it. Now, when it comes to the cost of loneliness, we've discussed this in the past. I mean, I'm sure everyone who's watching us knows that loneliness is equivalent, has a negative impact on your health that is equivalent to smoking or obesity. But what people often don't know is of the cost of loneliness in the United States alone are $6 billion in Medicare spending. In the United Kingdom, that amounts to £6,000 per person. That is over the span of a decade, but it's still a lot of money. Now, when it comes to employee loneliness, that is an interesting stat, again, from the World Economic Forum, published this year. They said that employees who are lonely are actually more likely to be absent from their job and more likely to quit their job. So we see that this issue of loneliness doesn't just start when people retire. And many people, unfortunately, are lonely way before that. Now, the last but not least challenge is caregiving. So we know that there are tens of millions of unpaid caregivers, family caregivers in the United States alone. Globally, that number is significantly higher than that. But what we often forget is that caregivers spend thousands of dollars out of pocket caring for an older loved one. And when we look at it from the economy perspective, we see lost wages because caregivers have to either quit working or miss days out of work. That amounts to more than $500 billion each and every year. Now, across OECD countries, we see that women have less retirement income. And that, in part, is because of caregiving duties to children and to older parents. So the economic implications of caregiving are really, really, really significant. Now, the next pillar that I want to cover, or actually the demography pillar, is how many older adults do we actually have in our population? So this report that was published from the UK showed us that the number of people over the age of 80 in the population of the United Kingdom is expected to double, and the number of centenarians in the United States is expected to quadruple. So the number of people, the oldest old globally, that number is growing significantly all over the world, and especially obviously in Japan. And in terms of sheer numbers, in the United States, that number is huge. And now, when we want to segment the population, one of the things that I keep saying that we have to segment the older population. We can't just refer to 65 and plus, but that is sometimes it's harder to do because not all census bureaus actually release this information. So I'm very, very thankful for Laurie Orler from Aging and Health Tech Watch for creating this handy chart for us about the number of older adults in each bracket in the United States. So we see that in the United States, there are over 60 million, 65 plus. And then when you go higher in the numbers, obviously the numbers, but it's a lot of people. And we can assume that the numbers are very similar globally. Now, when it comes to the economy, one of the more challenging things to do is to try to quantify or try to assess what actually is the size of the opportunity in the longevity economy. I mean, we know that the longevity economy is worth trillions of dollars or tens of trillions of dollars globally, but what is actually the size of the opportunity for AgeTech startups to develop technology for this market? Bloom Ventures did phenomenal work when they published a blueprint report this year. Bloom Ventures is an Indian VC, they're not an AgeTech fund, and they have had over 8 funds, 351 investments and 28 exits, and they have raised hundreds of millions of dollars in funding and deployed them to startups. When they published the report, I was super excited because they really did really thorough research about this. And they not only segmented the market, they also outlined what are the more attractive opportunities in this market across various sectors. And they also coined a term, WOOFIs, which is basically affluent older adults with no health concerns, which they believe is the most attractive opportunity or the most lucrative segment in this ecosystem right now. And we did get to interview Marmik Mankadi, who was the author of this report for our HealthTech podcast. And if you want to dive deeper into that one, you are more than welcome to check it out. Now, the third and final pillar that I like to orient myself according to is, of course, technology. So I like to look at reports from the big consultancies when I want to look at tech trends. And 2 reports that I found really interesting this year were McKinsey's Tech Trends Report and Gartner's Tech Trends Report. And now, interestingly, or predictively, you see that both of these reports have recurring themes, such as immersive technology, or as Gartner likes to call it, spatial computing, which basically means augmented reality and virtual reality. They both discuss artificial intelligence, and they both discuss quantum computing. And also, they both discuss robotics, which happens to be one of my favorite things to talk about. So the reason why I'm pointing this out is not just because I love robots, but also because I do believe there is so much potential for robots in HealthTech, and we do have some fantastic HealthTech startups developing robots. Now, this whole industry of robots who would potentially be able to not just serve industrial purposes, but also help us around the house, is growing immensely. So Gartner calls it polyfunctional robots that can perform multiple tasks, are flexible both in design and how they operate. And they predict that by 2030, which is 5 years from now, 80% of humans will engage with smart robots on a daily basis. So right now we have less than 10% of people who engage with robots on a daily basis. And they predict that in 5 years, that will be 80% of humans. Now, when McKinsey looks at these trends, they look at it from various angles, including how much interest they are gaining, and not just how much money is spent into it in terms of investments, but also like how is the public reacting to that? So they do say that there is a proliferation of sectors that are adopting robots. Obviously, the most obvious use cases are life sciences and agriculture. And they also say that the types of robots are expanding. So it's not just industrial robots. As a matter of fact, already exists in commercial restaurants. And they also say that humanoids and general purpose robots have surged in interest. And what we're seeing is that companies developing these humanoid robots like Figure and 1X are raising hundreds of millions of dollars. And you might have seen the Tesla robot or other humanoid robots that are supposed to be sort of general purpose robots and do things that humans are currently able to do. And they obviously say that AI is boosting this trend, and AI is sort of helping robots become more autonomous, and it has become a crucial part of the development of robots. So it sort of helps them learn, right? They can learn by imitation now. So they are designing robots that have skills that are sort of generalizable. So they teach them a specific skill, and then the robot sort of learns how to use that skill on other types of stuff. Now, when it comes to tech adoption, I like to look, I guess my northern star when it comes to tech adoption among older adults is obviously the ARP Tech Trends and the 50 Plus report, which is published on a regular basis each and every year. And what this report shows us that each and every year there is an increase in tech adoption by older adults, which is something that we already know. Pew Research Center also has shown us that multiple times in the past. And what's interesting about this report is that they sort of look at device ownership and they look at attitudes towards specific categories of technology. And obviously we know that most of older adults own a smartphone, but what I found surprising is that majority actually use Android devices and that they upgrade them every 2 years or so. That was mind-blowing to me. I sort of assumed people would be using their smartphones more than 2 years. And they also say that there is a growing portion of older adults who either are caregivers or was a caregiver in last year, and that they are taking advantage of technology designed to assist them. So we see that older adults are wearing two hats. They are growing older themselves. And the second is the caregiver hat. And in both hats, they might be utilizing technology. We also see that tech spending among older adults has remained somewhat consistent over the past few years in the hundreds of dollars each year. But we also see that people hold off on making a tech purchase due to finances, which shouldn't come as a surprise in today's economy. Another interesting piece of data from this year's report is that older adults, the majority of them, are not willing to pay a fee for any app that they are currently using for free. So that sort of is a red flag for any startups who are considering the freemium model of offering something for free and then charging for it in a later date or charging for a more premium version. And last but not least, when we look at the barriers for tech adoption, we see that trust and privacy are now on top of the list of barriers for tech adoption. So that again is, I wouldn't necessarily say it's a red flag, but it is a flag that tech developers need to be mindful of. Now, when we look at the UK, and they surveyed people over the age of 65, they published it in 2024, but they relied on numbers for 2021. So they looked at it from sort of the glass half empty part of the equation. They found that 18% of people over 65 in the UK have not used the internet for personal use or have no access to the internet. And 1 out of 3 is unable to use the internet to find information, helps them solve problems. And they're also unable to act with caution online. So that is honestly quite alarming. And I do hope that entrepreneurs in the UK are taking notice of these alarming stats. Now, we cannot discuss tech or tech adoption without talking about artificial intelligence. So I don't know how many of you have noticed, but AI is sort of in everything these days, even toothbrushes. So I honestly don't know why anyone would need AI in their toothbrush, but there you go. That's a product that you can get on Amazon these days. But what we do need to take into account is public attitudes towards AI. And research that was published this year and showed us that they surveyed 1,000 respondents. They found that products described using AI were actually less popular. So this is a link to the actual paper. And basically what the researchers have found is that including the term artificial intelligence in the product description negatively influences consumers' decision making. And that when AI is included in the product description, consumers are less likely to indicate a purchase intention towards the product. And the reason for that is that using artificial intelligence in a product actually lowers emotional trust. If you remember a few slides ago, we talked about trust and privacy, the top barriers for tech adoption. So if you're using the words artificial intelligence lowers trust, maybe it's worth considering using them at all. Now, when it comes to awareness, we actually see that older adults are aware that this is a thing, and some of them are using it. My assumption, because it's 50 plus being surveyed in the AIR report, is that most of the people using it, if not all of them, are using it for work, because currently, unless you really enjoy writing fiction or generating images with DALL-E, I don't see the purpose of using generative AI for recreation. Now, what about AI in senior living? So we turn to our trusted Aging and Health Tech Watch, which published a report about AI in senior living. Now, the report starts sort of asking people what's wrong with their existing tech stack. They did say that on one side, they have too much technology, also not enough information. Definitely too many apps, but still not enough useful data points, not enough actionable insights, and also lack of proactive or predictive recommendations. Luckily, startups are emerging to address these challenges. So we have AI offerings that are helping senior care organizations cope with the challenges that they're dealing with on a daily basis and trying to streamline daily operations and deal with all the data that they do have. Now, according to this report, the opportunities are, as always, turnover and recruiting new staff, which isn't new. It's just using AI to deal with the same problems that we've been dealing with for I don't know how many decades. Paperwork, and definitely streamlining operations, and definitely helping the existing staff do more with the limited amount of time and resources that they have, and also identifying residents' needs, sort of helping them and not reaching a point where there's a crisis. And that can be definitely done by using machine learning. And now let's look at startup trends and milestones. Now, there were a number of really interesting events that happened this year, but I want to take a step back and sort of try to remember how challenging 2022 and 2023 was when it came to startup fundraising. So we noticed that sort of 2021 was a peak year, or 2020 and 2021 both were a peak year in startup fundraising because of COVID and because of 0% interest. After that, fundraising became much, much harder when interest rates just started to increase. We saw less fundraising, way more layoffs. Thousands or tens of thousands of people got laid off. But 2024 was the year that startup funding bounced back. And according to PitchBook, in the first 6 months of 2024, everything started to bounce back. Now, we already saw that in the first half of 2024. And when we look at our sister ecosystem, which is the HealthTech or digital health ecosystem, I like to look at Rock Health reports because they publish them at least once a year. They say that 2024, when they sort of adjusted for inflation, was very similar to 2019. It means that the ecosystem is slowly returning to normal. When we talk about major events, one of the major events that stood out to me in sort of the intersection of tech and aging this year was this study that was done in the UK about Sarah's technology. So Sarah is an AI-powered home care software, and they are one of the biggest in the UK, if not the biggest, and they also own some home care sites. So what they did in the UK is they actually ran a study and they deployed their technology in around 150 local authorities in the UK. And their analysis showed that the use of their software reduced hospitalizations by over 50-year-olds by at least 52%, prevented hundreds of emergency admissions, predicted falls by tracking symptoms and mobilizing frontline nurses and carers to respond to high-risk alerts. And the bottom line of this study is that it is already saving the NHS £1 million a day, and that it could potentially amount to $1 billion a year by 2026 if adopted nationwide. That is, I've never seen such a study. I believe it is the first of its kind to sort of try to estimate the impact, the economic impact of deploying any type of technology in the aging sector nationwide. And so more power to Sarah and to the people behind this study. I believe it is really, really significant in pushing forward innovation in aging, at least in the UK. Now, when it comes to CES is always sort of the kickoff event of the year for HealthTech and for technology in general. And I dare to say that this year's HealthTech at CES was the biggest ever, thanks to the HealthTech Collective and to HealthTech Atlanta, and of course the CTA Foundation with multiple pitch competitions that gave away prizes, cash rewards to HealthTech startups and accessibility startups. Now, we do have two pieces about CES this year. We did publish a written review on it, and we also published an interview with the CTA Foundation's Steve Yule. So if you want to get a solid understanding of how to get your startup at CES next year, I encourage you to listen to that one. Now, when it comes to HealthTech funding, we definitely have seen more funding available for HealthTech startups in 2024 and going forward into 2025 than ever before. And that is thanks to new funds that were raised or new accelerator funds that received new funding from the government. So the two most notable ones would be the Envisage initiative, which is funded by Canada's government, and also the Centre for Aging and Brain Health Innovation, which is a solutions accelerator funded by Canada's government. And we also have our veteran HealthTech funds. We've got Third Act Ventures and 1843 and Ziegler Linkage. So those funds are going strong, and we definitely have way more early stage funding than ever before in this ecosystem, and also multiple accelerators, both in North America and in Europe, supporting HealthTech startups. And all of these accelerators offer funding as well. Now, we also have a fairly interesting angel network that I was referred to recently by one of our HealthTech Academy members. Thanks to you, by the way, Susan. So they are funding experienced innovators only. So their investment thesis is built on the fact that the average age of successful founders in the top 0.1% of high growth startups, the average age is 45 and not 25, like some people might assume. So that's great if you're an older and experienced founder, check them out. And we also have grant funding. Most recently, we've learned of Mods Ventures that is offering $50,000 for dementia care. And we also have an interview with Mods Ventures on our podcast. And of course, we have government grants from the governments of Canada, the United States, which are currently, they're past the deadline, but you can definitely try to apply next year. And if you want to make sure that you don't miss out on any of those funding opportunities or any of those deadlines, accelerator deadlines, and so on and so forth, I do want to invite you to sign up for our free newsletter, because we do try our best to make sure that you never miss a deadline. Now, when it comes to healthcare and health tech, one really, really, really earth-shattering piece of information that I stumbled upon in the past month is that satisfaction with healthcare in America is at a 24-year low, and less than half of adults in the United States, their healthcare quality positively. And I was really blown away by this, but I guess it shouldn't come as a surprise when we take into account the fact that life expectancy in the United States is actually declining in the past few years. So obviously something is not working. And that's an opportunity for startups. And another opportunity for startups is Google releasing their open foundation models for health app developers. So the Health AI Developer Foundation is a suite of open weight models publicly available to help developers build and implement AI models for health applications. So I do encourage you to check it out if that is something that you might be interested in developing. And another piece of really, I guess it shouldn't come as a surprise, a bit from the news, AI in healthcare news, that OpenAI's transcription tool makes up words patients have never said. I'm sure that any one of you who have ever tried any sort of generative AI or transcription tools has encountered hallucinations. And I guess that is something we can live with on most aspects of our lives. But when it comes to medical transcription, that kind of should raise a red flag. And we know that there might be regulations coming on this sometime. But we also know that regulators tend to be a few steps behind innovators when it comes to these types of technologies. Another really important milestone is the FDA granting approval to Apple's AirPods Pro to become an OTC hearing aid. That is quite remarkable for Apple and also sort of marks a trend of mainstream technology serving the older population in a relatively affordable way, because regular hearing aids can be quite expensive. Another piece of great news from the FDA is that they're launching a healthcare at home initiative to advance home health equity. Hopefully, that will also be an opportunity for more tech to be brought into the home to help care for more people who are able and willing to age in place. Next up, equity-owned healthcare companies are increasingly going bankrupt, which again ties us back to the fact that most people in the United States aren't happy with their healthcare providers. So apparently, at least 20% of the 80 healthcare companies that filed for bankruptcy last year were private equity owned. And so when a regular business goes out of business, goes bankrupt, that is one thing. I mean, it's devastating. People lose their jobs. But when a healthcare provider goes out of business, the impacts are more than just financials. It does create a lack of healthcare access, which is obviously something that we never want to happen. And the last organization that did really well this year was the World Health Organization. So they got ahead of the people asking AI for health advice, and they launched a generative AI health promotion tool called Sarah. Basically, what Sarah does is it relies upon the massive database that the World Health Organization has, and you can query the database by talking to Sarah, basically. So you can type or you can use your voice and have a conversation with Sarah. Sarah can communicate in 8 languages and is available on any device. So that is remarkable that they managed to pull it off in a relatively short time for a large organization. They got ahead of it, and they are providing us with reliable health information in a very accessible way. Another great thing that the World Health Organization did is that they published the Digital Transformation Handbook for Primary Healthcare Organizations. With a disclaimer, they're publishing it assuming that people who want to use it already have like high-level buy-in from appropriate stakeholders within the organization. And the last trend that I want to talk about in healthcare is retailers offering healthcare or not. I'm unclear about what exactly is happening because we see them going sort of back and forth. So Walmart first in 2024 decided to shut down healthcare clinics, but then it launched same-day pharmacy delivery. Obviously, Amazon and Walgreens and CVS are already doing. And Amazon shut down their Amazon Care in 2022. And then in 2023, they expanded the Amazon Clinic nationwide. And in 2024, they consolidated Amazon Clinic into their one medical brand. So it seems that retailers are trying to figure out how to get into healthcare because obviously that is a multi-trillion-dollar industry that they want to get in. They're still figuring it out. And I thought that was interesting trend to review. And before we dive into our predictions and future opportunities, I want to talk about one last trend that is probably the worst. It's just the worst. So scammers are just getting more creative. They are pretending to be government officials, tech support, customer service, and they can even pretend to be a loved one that you know and trust. They're pretending to be legitimate search results on Google. When you search your bank information on Google, you might find a phone number that looks legitimate, but when you call the number, it will actually lead you to a scammer. And they're even using parking signs to scam people. If you noticed, some of the parking signs have a QR code that you can scan, pay for parking. They're sticking their QR codes on these parking signs. So there isn't a whole lot to do with signs, except for being aware that these scams exist. When it comes to incoming calls, obviously there are startups dealing with it. There is more than one startup with screening phone calls to prevent phone scams. And we also have the AI granny, Daisy, which released in the UK last year by a phone company called Virgin Media O2. And what Daisy does is waste the scammers' time on the phone. So at one instance, she has kept the scammers on the line for 40 minutes. So I thought that was a really brilliant solution for beating scammers at their own game and making sure that they don't have the time or don't have as much time to actually scam a real person. And now for future predictions. I'll take out my crystal ball and we can try to predict what the future or what the near future could hold, because looking 10 or 20 years down the line in this day and age, that is a lot. So first of all, we definitely see an enhanced focus on the longevity economy opportunities by mainstream technology. So we've seen this from Amazon and Apple before. It's nothing new, but this is a growing trend. And also we see more investors getting into this space. So that is really, really fantastic in my opinion. We also see accelerated adoption of AI in aging and care. And I believe that is inevitable. First of all, because most of the software we will use in the near future will have some sort of AI component or machine learning component in it. So we won't necessarily know that AI is under the hood. What we'll also see that there are startups using emotional AI in companion technologies. There is no reason why that shouldn't grow. I also believe that we'll see more sort of product layer LLM applications in the AgeTech space, because we have a lot of, the AgeTech space is sort of a niche and it has a lot of sub niches that can be perceived as small opportunities by big tech companies or by startups who want to be a Deca unicorn. However, there is still opportunity there, and there's still opportunity to use large language models to solve specific user problems or specific business challenges. So basically what these startups will be doing is using pre-trained models and building the application layer. So they won't be developing the foundational models themselves. And now for the opportunities. I do believe there is still a lot of opportunity in cognitive and dementia care innovation. For reasons we've previously discussed, this is a huge opportunity in terms of like the cost of dementia. Same goes for caregiving. Caregiving costs over $500 billion a year in the United States alone. And same goes for scam prevention. That also is a huge opportunity. It costs a lot of money to individuals and to our economy. And last but not least, longevity-focused financial tools, the future of work. Those are two opportunities that are sort of intertwined. First, allowing people to work for as long as they want, not force people out of the workforce, and help people reskill and upskill when needed, and also help them with financial planning, have better tech-enabled solutions for financial planning. Now, before we dive into Q&A, I want to offer you, if you enjoyed this briefing, to join our HealthTech Academy membership. Most of what we discussed today isn't new for our members. We discussed these topics and covered these reports throughout the year. We have a discount code for you, 20% off, valid for the next 72 hours. And I also want to invite you to get a discount on our Discover, Design, Deliver masterclass happening next week, in which we will dive into how to build age-friendly or how to create age-friendly products. I'm hosting this masterclass with my colleague Michal Halperin-Benzvi, who is an expert on age-friendly product creation. So we have a 20% discount on that one as well. And if you sign up for next 72 hours, we'll also throw in 6 months of membership worth $100 in the masterclass price. And now I want to dive into Q&A.